or they really want the cert. I was going to ask Damien if are you recording this, but that's fine. I won't hit leave meeting this time. Got it. There we go. And got it. There we go. Okay. So yeah. So today, well, like I said, this is kind of a series of talks that I'm hoping to kind of talk about data and kind of the experiences I've had with it, and kind of not just what I'm saying, but also kind of the experiences I've had and the kind of conclusions I've came to, and why I've done that, to try and explain it, because I'm also very conscious that not necessarily, like, there's no absolute truth here for this stuff, and a lot of things are incredibly context dependent. So some of the things that I'm saying may be wholly inappropriate for what it is you're trying to achieve, because you work in like some kind of heavily regulated environment where basically an awful lot of the things that I'm advocating for are just not like allowed under the regulatory regime and stuff like that. So but at the same time, I'm always more than happy to. I think the principles I'm trying to kind of convey are kind of universal. It's just how you actually apply them may change depending on, you know, circumstances. So on that note, though, as well, and I mentioned this last week, and I really do want to reiterate it. The kind of the 8 lectures I laid out were very much kind of a starting point, and they're absolutely up for discussion and negotiation. So if there's something I'm talking about and it doesn't look like I'm going to cover it in a lot more depth, and a few of you, or even one of you, thinks that it's something that would be of a lot of interest, please by all means get in touch and make some suggestions of something you'd like me to talk more about. Or if there's something that I completely not discussed whatsoever and you find that surprising, by all means, please mention it, and I'll certainly try and incorporate it. I mean, there may be some things that I just don't feel I can talk about because I don't have.
Sorry, Mr. Earlier, I know you were saying.
Hang on, I think we need to put someone on mute.
The access, you know.
I can't, Damien.
Yeah,
actually,
no,
could you mute everyone? I can unmute myself as well.
Be there for their lock and our lock, but just I don't know. Sometimes they take them as well, so you never know for sure.
The joys of live. I think you can hit mute all, Aidan. There we go. You can hear me, right? Yeah. Okay. So, right. So, sorry, where was I? Yeah. So, like I said, I'm not particularly wedded too much, and for that reason, I haven't prepared all 8 weeks in advance. I kind of have a rough idea of the direction and the journey I want to go on, but I've only kind of prepared a couple of weeks in advance, and I'm more than happy to kind of junk it, because a lot of this stuff is kind of reusing aspects of things I've spoken about before. So, you know, this isn't me here trying to, you know, bestow a load of knowledge on you and you guys just kind of have to accept it. To me, it's only really interesting if people find it interesting and useful. So, and that can really only be kind of led by a bit of back and forth. So please, by all means, you know, come to me with suggestions, or Damien or Aidan or whoever. I'm more than happy to kind of field ideas. And 1 or 2 people reached out to me last week, which is great. Please give me more of it, because as I said before, effectively, when you look at it physically, what's happening here is I'm basically talking at a screen for an hour. So it can be very, and that really has been shown into sharp relief, because I organize our meetup groups that I referred to last week, and we had our first in-person meeting last night, which had a much bigger, a bit like this, much more people than I expected showed up. And I gave a talk on reproducible research, basically because I didn't think anyone was going to show up, and I thought, well, I can't really ask anyone to give a talk. So, but what I really, having, you know, been at a computer screen for about 2 years now, 2.5 years almost, it's very clear, like the difference between talking in person and talking at a computer screen is really, really big, especially just on those kind of unconscious feedbacks. So please, by all means, do feel free to participate. And on that note, by all means, use the chat. So if you have any questions, or you have any comments, or even something that either you massively disagree with or you want me to clarify during the next, you know, 40 minutes or whatever, please just pop it into the chat. Even if I don't see it, Damien or a couple of other people I know will, and they will get put to my attention. And by all means, Damien, on that, if you see something, just jump in and interrupt me. Like, don't worry about disrupting my flow. I'm more than happy to kind of field any questions as they arise. And if it's something that I can't really talk about right now, because it's more relevant to something that's coming later, I'll just kind of defer it till the end or to a little bit later. But anyway, we can, enough of kind of the waffle. Let me just go full screen. So yeah, so today I want to talk about a topic that's very, very dear to my heart. And like I said, it's something, it's not necessarily something that is, you know, an absolute truth. As I said, I know a couple of people who would criticize this approach of mine because they, for reasons that I will get into a little bit later, for the issues with this. And they, you know, it goes to an adage I'm going to talk about. So yeah, so I'm going to talk about two things primarily in the next kind of 40, 50 minutes, whatever it is. Particularly, I'm going to talk about the KISS principle, and then I'm going to talk specifically, just trying to make things concrete. I'm going to talk around data quality, which is, you know, a massive topic for anyone using data, and it's only become more and more to the forefront over time, and that's kind of some anecdotes I can give a little bit later. But specifically, to keep things as practical as possible, what I'd like to talk about is how you can apply the KISS principle to the problem of data quality, and kind of some things I've done with that. And it's you know, whatever it is. So let's start on the first topic, which is the KISS principle. So the KISS principle, contrary to popular belief, is not that the only way to success is to paint yourself with a white face, Atlantis costumes, and prance around on the stage like KISS do, sticking your tongue out. It's more of an attitude that Einstein proposed. It's keep it simple, stupid. And this was just one of those great, when I first found these images and I was trying to make this terrible joke, I Googled a photo of Einstein, and the first thing I found out was him sticking his tongue out, just like Gene Simmons, which I took as a sign that the universe said I needed to kind of put these two together. Einstein was apparently notoriously kind of whimsical and didn't take life very seriously in many ways. But so this is a genuine photo. It's not photoshopped. I thought it was. It was, I think, the progenitors of the paparazzi, and he found them one day and he just stuck his tongue out, which I think is great for like one of the most eminent minds ever. So he kind of, now I think this is accurate. I'm pretty sure it is, and it's certainly been attributed to him a lot. But like a lot of these attributions, they're not necessarily true. But and it's certainly a big principle in physics and in a lot of the what you would call hard sciences, which is that everything should be made as simple as possible, but not simpler. And quite often, I'm going to focus a lot on that first part, but it's very, very easy to fall into the trap of going too far and going too simple. And the reason why that can be an issue is quite often when you oversimplify something, you're not actually helping yourself, because the reason why you go for simplicity is to make things easier to understand and stuff. But quite often what happens if you oversimplify the problem, you end up actually making things harder to understand, because you've kind of glossed away some of the things that are important, that become relevant, and then you end up making like false analogies and stuff like that, which then get harder to understand. But fortunately for a lot of people, the first principle, the first part of that sentence, making things as simple as possible, often gets overlooked, and people don't quite often. People ask me for help for a lot of this kind of stuff, and they're surprised at how simple approach I take to solving what often can be quite gnarly and difficult problems. And the point I'm always making is that, yes, I know this is simple, and I know this is stupid, and it's not actually really solving the problem fully, but A, it's making a start, and B, it's allowing us to learn more about the problem, because it's very easy and it's often very tempting to just jump in straight away with, kind of worrying about the complexities immediately and trying to solve all these problems. But there is thank you, Said. I see a question there. I will address that in a bit. But the short answer to that is it depends, and it's hard to know. Sorry, that Said has asked a question. How do we differentiate between simple and overly simple, and how do we know what's relevant? That's the trick. Like I said, I'm not passing out a magic bullet here. However, what I have found is that, and I might come to this in later slides, but I can't quite remember, but I'll address it now anyway, is generally when you start with something simple, you can make the assumption that this is too simple, right? Like sometimes you're lucky and you just do a simple thing and it solves the problem and you're done, right? And quite often that will actually solve the problem. You'd be like, that will be more often than not. I would say if someone was kind of saying you need to put a probability on it or an estimate of how often that happens, I would say 60% of the time, just this is completely off the top of my head, slightly more than half, about 60%, 3/5 of the time, coming up with something really simple is actually answering the question that people are answered. And it's very easy to go down the tunnel of immediately going, but yes, and how about this and what about that? And while those are all relevant, sometimes they're just not as important as answering the things. And to give a good example of that, sometimes you just do a summary by region or some kind of product and calculate averages or calculate totals. And sometimes those kind of group summary statistics actually answer your question. However, what it also does is, even if that proves to be insufficient, it does tend to also highlight where the problems are. And that can often throw things up. It kind of tends to help you focus on where the problems are and where you need to make things more complex, because you kind of should think of complexity as a budget. So you don't just want to put complexity everywhere. You want to kind of spend it as optimally as possible. And by starting with a simple problem a simple solution and taking a very simple approach, you can then start to see, well, where do I need things to improve? And if something is, it's very easy to see if you've overly complex. You're overly complex if you could have answered the question with a simpler approach. So that's why I'm also saying, like, it's also like an effort issue. But yeah, I'll kind of address that as we go on. But that's an excellent question. Figuring out what's relevant, that can be very hard to figure out. You kind of have to try it and see. And we can probably bring up some of that in some of the examples I'm going to show. But thank you, and I love the fact that we're getting questions straight away. It's nice to get some feedback. So I want to talk first about the benefits for why we do that, and then I will talk about the costs in a little bit. So basically, I've kind of, like I said, a lot of these things have came through kind of bitter experience with, I've stepped on an awful lot of rakes, pretty much since I started doing all these kind of things, even as a kid when I was doing maths in school, because I loved maths as a kid. And I remember once I was doing homework and I came up with this incredibly complicated solution where I was introducing all these variables for this relatively simple algebra problem. And for some reason, I got it in my head that I needed to go this crazy way. And then I realized, there was a much simpler way to do it. And that's how I was like, how? Like, everyone in the class got the answer right as well. And I was like, I knew I was kind of doing well. And I was like, this is really complicated. And it's really easy to mess up. How come everyone else got it right? And I was like, oh, actually, they took the simple solution and you were just basically being intellectually arrogant, Mick. And that's why you made this a massively complex problem, when in reality, if you'd just taken a step back and looked at it, you can approach it in a very simple way. Now, it wasn't trivial, but it certainly wasn't nearly as complicated as I had made this problem in my head. And then kind of going on into my career, the first real time I realized that simplicity was amazing was when I started out as a quant and we were doing time series forecasting. And basically, I had a very simple time series model that did a reasonably good job of forecasting volatility, and by that, it just, from looking at forecasting forward, it was kind of getting things in the ballpark, which is kind of as good as it can get in those kind of things, at least with the technology I had available. I mean, it's probably easier to do now, or better to do now with kind of deep learning models. I'll get to that in a sec. So and then I was kind of thinking, well, maybe I need a few more models, and maybe there was these issues. But then to go into the simple solution, the more I realized there was aspects that my model forecast was not capturing very well. And I kind of started looking at going down that route. But I realized really quickly that it's actually very difficult. Answering the question, which model is better, is a very, very complex question to answer. Like, it's hard to know, and it leads into this huge philosophical debate. Now, we'll touch on aspects of it probably next week when we talk about risk and uncertainty and stuff. But actually just trying to, once I sat down and started to think about, okay, if I build like this model and this model and this model, and I kind of built some of them very quickly, how do I know which one is better? Well, the first question you ask is, well, how do we measure that? How do we kind of, you know, figure out like what does better mean? And like, because it's not a simple answer in terms of one question either. There's loads of different ways in which you might want a model to perform under. And, you know, is a model better just because it has a narrower prediction interval, or is it because it gives you a better expected result? You know, there's all these different things that don't necessarily have definite answers. And sometimes it boils down to kind of risk preferences and stuff like that. So at that point I went, I'm just going with the simplest model, because I don't really have a good way of depicting, and there's this principle in science of the principle of parsimony, which basically is the simplicity principle. And it's like, if you have multiple potential explanations for something, generally the simplest one is the best. And that was also kind of a guiding principle for where I came with that. But and that had quite a narrow application though, but I realized that like simplicity was really important. And then the next time it happened to me was when I was actually we were at trading, and the trader guy came to me and he said, we seem to be systematically over forecasting. Like we seem to have a bias in our model that is saying, you know, we're thinking something is here and it's very consistently coming out here, pretty much across all the different stocks that you're producing your forecast for. And he asked the very simple question and very honest question of, why is that happening? And I did not have a great answer immediately. I had to go back and take a look at it. And that is not good, because, or at least you need to have some ideas of why that would be. And the problem with very complex models is there are so many different ways in which, like, certainly when you're dealing with complex models, you know, there's a lot of different weird interactions between one thing and another, and they cause lots and lots of problems. So, you know, you need to be kind of very cognizant of that. And being a simple model does allow for having a better understanding of at least why the model is flawed. And, you know, in some cases, it's actually more important to have a flawed model that you kind of have a very strong understanding of the shortcomings for than it is for using, like, I'm trying to capture all those like nuances with a more complicated model. A great example of that, again, going back to my derivatives, is the Black-Scholes price. So the Black-Scholes model for option pricing, it was created by a bunch of economists in the mid-70s, Fisher Black and Myron Scholes, and then another guy called Bob Merton came in and did some of the maths behind it as well. That is kind of a notoriously oversimplified model for option pricing, but they've actually found while there are like more sophisticated models that do a better job of simulating the underlying like processes that option prices are trying to capture, they actually figure out it's better to just kind of essentially like jury rig the outputs and deal with it in certain ways, because it is a very simple model that's very well understood, and it's easier to deal with the fallout of the bad parts of the model rather than have to deal with a more complicated model. And I always thought that was so when you're dealing with areas of large uncertainties and big tail risks, that's always struck me as a very kind of wise way to do it. And again, it's probably evolutionary in that the people that didn't treat it that way probably went out of business. So the people that survive are the ones who are taking a more cautious and, you know, somewhat risk-averse approach to that kind of thing. But the other key thing with simple models is they do tend to be more robust. And by that I mean is that the more complicated models do much better when the regime in which they were created for persists. So a great example of that has happened in the last couple of weeks is if you look in cryptocurrencies, and there's a whole bunch of cryptocurrencies that are like supposed to tether to the US dollar or you know, they're stable coins, and there's all these things. I will admit I don't really pay a huge amount of attention to crypto, but I do know a bit about it. And basically what has happened with a lot of these things that are supposed to, you know, provide hedges against things and act in certain ways is that the assumptions they made, you know, for what is considered normal activity have been violated, and now they've just completely exploded. Whereas what often happens with a more simple model is they're not as sensitive to the noise. So as a result, they kind of smooth a lot of that noise away. So even though they still might be not great models in terms of predictive performance or whatever, they tend to be less bad than a lot of the other ones. Now, so hopefully I've sold you on the idea. How am I doing for time, Grant? I like I said, I love simple, but you know, it's not without its drawbacks. The simple approach can be particularly bad, especially to go to the point that a couple of people have mentioned is oversimplification can be a big issue. And I think there's a great book. I actually am not familiar with that one, but I do know Ben Goldacre. He was a journalist with The Guardian, I think, and he does a lot of the spoof science and a lot of the debunking of nonsense and essentially, to talk about last week, the like essentially bullshit science, where I think you'll find it's a bit more complicated than that. So what often happens is if you kind of blindly apply your overly simplified approach to something, you can have very unexpected and very severe kind of unexpected consequences of this. So it's like the classic thing of the principle of public policy of the law of unintended consequences. So if you take very, very simple approaches to things, a great example of that is we've got far too much crime. So let's imply the 3 strikes law in California, where basically when you commit even your third petty crime, the third petty crime is considered a felony and you're locked up for the rest of your life. And that sounds like a great way to deal with crime because it's creating this massive deterrent. But of course, what's actually happened is a lot of people don't really think about getting caught when they commit crime. So now loads of people are in prison. You know, so you quite often you do need, you know, a bit more nuance and a bit more issues. And so the unexpected consequences of a very simple of taking a complex problem and applying a very simple solution to that, or a simple approach to dealing with the complex, quite often throws out very kind of weird, unexpected, and sometimes quite highly negative issues for that. And so this goes back to kind of another point I wanted to make on that, is that oversimplification is a problem. And that's why I'm not necessarily saying that when you apply a simple approach, you stop there. However, what I'm kind of advocating for is start with a simple approach and see how well it works. Look as you know, as effectively as you can for the ways in which it will fail, and then try and figure out which of those failings are consequential and which of them are essentially immaterial or kind of noisy, or yeah, it would be great if we could do it, but really it's just kind of noise when we've got this much bigger consequence over here that we need to focus on first. So that is kind of the way I tend to approach it. And the other great thing about taking a simple approach is, and this leads to how do you know when something is oversimplified or not, is quite often for me anyway, when I start with a problem and I'm taking these kind of simple approaches, I kind of know they're not going to be adequate. I know that I'm going to have to build in more complexity somehow. But like I said, I consider complexity a bit like a budget, having a budget. I've only got so much of it I want to spend, and I want to figure out where can I spend it most effectively. And the only way you'll kind of learn that is actually by doing a simple thing that basically falls over, and then check to see how does it fall over. So I have an old thing that the lads are all, anyone who works with me for any length of time will sick of me hearing, is that, like, you know, when things go wrong, I want blood dripping out of the fan of the monitor. You know, I want things to explode loudly when they fail. And it can be sometimes hard to engineer that with very, very complex models, or even relatively complex models, because they're much better at adjusting to those kind of those signals. Whereas a very, very simple model will fail. A very simple model will fail spectacularly in the sense that it'll just produce nonsense answers, right? And it just won't really make a lot of sense. And that way, you know that I really shouldn't trust this model. And that to me is another very important aspect of dealing with uncertainty in data and all that kind of stuff. Is sometimes, certainly when you're dealing with very complex things, humans are still better than computers at a lot of this stuff. And sometimes you just need a way to know how to ignore the computer, because the computer is doing something stupid, because, you know, it does exactly what it's told to do, and it will do that regardless of whether or not there's quote unquote common sense. So we need to kind of have intuitions for this kind of thing. So when I start with a very simple approach, I'm kind of looking to see where it's failing, and then where can I spend my complexity budget to say, oh, actually, you know, there's this kind of cohort of people or aspects of the data. There's this like subset of the data that like is performing terribly. It's not really doing a good job. How can I fix that? And is there ways to kind of tweak or make changes to either my inputs or my outputs to better capture what's going on over there? And that typically happens when you have interactions. So, you know, it's not necessarily that you have these subsets where, you know, they're, let's say, you know, based on, you know, socioeconomic or like income bracket and region of the country, and just I'm thinking for customers here, and product that they buy. And for whatever reason, your predictive model is just not working very well. When you combine, you know, this income bracket with this region, with this product, the model performs terribly. So we need to kind of figure out what's wrong with the model that is preventing that kind of thing. So our simple models are perfect. You know what you're putting in, you know what you expect out, so you can easily tell if it's working. Yeah, once that's exactly, and you can add for that is, thank you, David. You put that, you've said in like 1 or 2 sentences what I've been trying to say inarticulately for the last 15 minutes. That's great. Oh, there's a couple of other questions. I will take a look at that in a best. So, but the big problem with them is, and this is where it goes back to like the perverse incentives and stuff. Typically, though, it is fair to say that simple models do not do as well on, let's say, most performance metrics that you may come down, and that, you know, that could be some kind of predictive accuracy or average predictive accuracy, or even sometimes you will just have like wider, you might have 2 models that are kind of given the same answer for something, but the simpler model will have a wider band of predictive outcomes. And it's basic, the simpler model will say, you know, it's somewhere between here and here, and then the more complex model will just narrow that and maybe shift it a bit or whatever. And, you know, and obviously having higher confidence in your outputs is quite important. So therefore, some performance may not necessarily be measured in terms of pure predictive accuracy. Sometimes it could be just a narrower set of confidence that, you know, I'm getting the same answer, but now I have a lot more confidence that this is like the right answer because it's in this narrower band. So I've got a question coming here. What is the best way to risk materiality in decision making? So yeah, that's a good question. The short answer to that is it depends. The way I tend to look at it is you kind of have to take a step back and say, what is it that I care about? So for example, in fraud, for example, when you're kind of doing fraud detection is a notoriously difficult data problem to solve, because inherent in its nature, it comes with what's called the low base rate problem. So the thing with fraud in insurance or in like payments or whatever is fraud takes up a very low percentage of the data population. So by that, I mean, like, you know, in insurance claims, fraud tends to be like, I think even it can be very high in car insurance, and that's 10% of claims can be fraudulent in particularly bad books. However, in credit card transactions, I can't remember what the number is, but it's something like 1 in 10 million, or like it's really, really low. And the problem with that is you essentially have a very low data problem. So, you know, because you have a low count of data in this massive population, any of your predictive models tend to get swamped by false positives. And we might talk about, I kind of have penciled in one of these hours to talk a little bit about basic statistics, and just kind of at a very high level. We won't really get into the maths or anything, but just kind of some concepts. And I'll probably talk about, you know, the whole false positive and false negative, because it's also very important concepts in machine learning. But in that case, you know, you've got to ask yourself, what's more important? Is it more important that I detect all fraud, or is it more important that I'm willing to accept a certain amount of fraud to slip through the cracks, because I don't want to flag everything that looks like fraud? Because then what will happen is I will completely alienate my customer base. So, and you know, it happens all the time, and I hear people complain about it all the time. It's like, man, these guys' fraud detection is terrible. I am constantly getting dinged for some transaction to be fraudulent, you know, and it's messing stuff up because they put my payment on hold for 2 or 3 days, and the guy was waiting on the money, that kind of stuff, you know. So, you know, it depends on what considered there is material. Or it could be, I mean, another good example is in insurance, because I'm assuming, I know a lot of this is insurance focused. That's actually one thing I should get in terms of I'm conscious of the signups, but I'm curious because I know there's also pensions and fund management and stuff like that. So, you know, it's not going to change my examples, but it explains how much I might change them. In insurance, you might not care so much about the main body of the, you know, in insurance, we've dealt with specialty lines where, you know, you might have, let's say, you know, a few hundred policies on your book, but you're dealing with maybe a couple of 100 million in premium, right? But, you know, it's very, very large, big ticket items, and, you know, US public companies and stuff like that. Most things involving them come with high premium, just because you know, it's the big boy league and things tend to be very expensive because the legal fees and whatnot. I have seen, you know, lines of business where you might have, let's say you have a few hundred policies in your book, say 10 of them will turn into a claim, and 10, I don't mean 10%, I mean 10. You will have literally 10 claims, but one of them claims might be 80% of your losses, right? So if you have a book of business like that, you're actually not that worried about necessarily being super accurate. You want, you know, a good feel for, you know, the other 9 cases that you know you're going to get, but you really want to focus your attention on trying to get as good a read as you possibly can on what is going to turn into a large claim. And if it does turn into a large claim, how big is it going to be? Because, you know, in that case, 50 million versus 150 million could be material, or it might not be, depending on what layer you are on the risk. And, you know, so you kind of have to take a step back and look at what it is you're trying to achieve, and then try to figure out, well, is there a way to quantify this appropriately? Because, you know, bad quantification, quantifying something that's not relevant, or it tends to mean that you focus on those things that you quantified, and they might not necessarily be predictive of performance. There's a great example of this was the Vietnam War with America, where they were quantifying losses because they prosecuted the Vietnam War, and the Ken Burns documentary talks about this a lot. They basically learned an awful lot of lessons in World War II and then kind of applied them again to Vietnam. And what they didn't realize, that World War II, it was a completely different war that they were fighting, because it was essentially effectively nation state versus nation state in World War II. So it was a much more of a, to put a terrible word, it was more industrialized, because you could really think in terms of quantifying things and productionizing everything. In Vietnam, it was a complete guerrilla warfare, where even though it was the North Vietnam Army, it was essentially a guerrilla war, and body counts and things like that, which were a very good way of measuring, you know, progress of the war from a purely kind of sociopathic management of the government point of view. It was an effective way of doing it. It was completely inappropriate in Vietnam. And it caused and again, going back to the simple and oversimplification, it created incredibly bad incentives where, you know, basically people were just being thinged on body count. And as a result, you know, if they came across a village and it had been, they'd either kill them or whatever. They were like, oh yeah, all enemy combatants, that's good. Another great example are stop and search quotas for the cops. So a lot of police places, when they started to quantify things in the 80s and 90s, they started putting in like arrest quotas, and the 70s as well, especially. So you can imagine what happened. They'd be looking at things and they're going, oh, actually, we're a bit low for the month, lads. It's time to arrest some people. And that is literally what happened. That's not hyperbole. So you kind of have to be, the fog of war is a great example of that, Damien. Yeah, it's a 2-hour documentary. I think you'll find it on YouTube as well. But he talks an awful lot about, you know, the complexity of decision making under uncertainty and how you kind of deal with it. And he was very, very candid about his failings. That was the one thing I found very impressive about McNamara, especially because I didn't know much about him when I first saw the documentary. So I'm probably a bit more sympathetic to him than a lot of other people are, because I kind of saw his side of the story first. And that does tend to, you know, first impressions make a difference. Whereas the Ken Burns documentary is much more critical of him. But anyway, so that's kind of where we are. I am way behind time because I'm blathering on at length. Okay, but that's fine. All right, so that's kind of where we're going to. So how do we apply this to the problem of something like data quality? Right, and the reason why I bring this up is it's very easy for me to talk in higher-minded ways. I'd like to try and kind of give specific examples now. The nature of the beast is, ideally, I can only really talk in very big generalities. The best way to do this is to actually, unfortunately, is just to do it. So I've kind of picked this, and I'm coming up with kind of a hypothetical to an extent to just kind of illustrate some complementary, some of the concepts. But you know, ideally, what I would like to try to do, and I'm thinking about later on in the course, I'm going to try and come up with better concrete examples, because I have found that the best way to explain a general concept is to actually go through a specific example and then generalize. Whereas in my experience, it's much easier to go from like a specific example up to the general and back down to the specific when trying to generalize something, rather than starting kind of high in the clouds with the general concepts and then get specific and try to apply it. I found just whatever way kind of the human brain works, we're easier at generalizing from specific to specific. Now, sometimes that can be a problem. But anyway, so I'm going to talk a bit about data quality. Now, in my experience, I have it's a little bit less true than it used to be, but in general, whenever I have spoken to someone who's kind of working on data and they want to use it better, everyone always tells me that they have pretty good data on stuff. They're just not using it properly, right? And they want to learn how, and they've collected all this stuff, and we think it's great. Now, the reality is it's been rarely true. That what actually happens is when you go in and look at stuff, there are issues that were not known, right? Now, there is an exception for that, and the exception is based on the simple test. So I have a very simple test. I was discussing this last night with some of the lads who were at Dublin Data Science with me. And as to put it in mathematical parlance, this is it's necessary but not a sufficient condition. As a simple test is it being used for something, right? So the first thing I will always ask people when they have their data is, are you using it? Or are you just kind of siloing it away in some kind of data warehouse and you're collecting data for like 6 months and then you're planning on using it to get that data to generate insights? And if that is the case, and that happens more often than not, if the data isn't really being used for anything, it's probably not useful. So I don't want to say it's completely useless, because that's not the case either, but it's probably not as useful as it could be. And the solution to that is just to use it, right? So what I always tell people is, you know, the best way to test your data quality is to actually use it for something. Because if you have issues with your data quality, using it, and by using it, I don't mean create fancy predictive models or anything. Quite often I will just tell people, create some like statistics dashboards that have some kind of like time series of whatever it is you're collecting, like do daily statistics of it, and you know, and then show those kind of time series numbers. Because even the simple act of having to actually get that data back out of where you're storing it and put it to good use, and you know, create a dashboard on something, you'd be surprised at how many issues that will often throw up. And it allows you to remedy those situations as quickly as you possibly can. Because if you're not doing that, then what might happen is we've been collecting all this data for a year, and then we have this one field that we think is really important, but somewhere along the line, a change request that got in that people weren't aware of, and what we thought we were collecting wasn't actually what we thought we were collecting. Or worse, which I've often seen, is we collected it for a while, and then at one point a change request went in and it got changed over, but we're not quite sure where, because things kind of got messy in the middle. So we've kind of started out with the data here is representing one thing, and the data over here is representing something kind of similar but subtly different. And at some point in the middle, it changed and we don't know which. So we can't even say, you know, if you're lucky, you can say on this date, before it meant this and after it meant that. But, you know, we can't necessarily tell that. So the question is, how do we use it? And, you know, I often give an example of that. And so this kind of goes to the other thing I talk about when I'm doing my data work is, to me, data visualization and exploration is probably the most important thing a data person can do. To me, understanding the data and having a good sense of, you know, what it's telling us, being able to answer questions about it, like, what does this field mean? Or, you know, how imbalanced is this particular categorical variable? Is, you know, 60% of the values are this level, or aren't they? Or are they, you know, is there a pretty even spread? Like, knowing those answers is a pretty important way of doing it. And that goes back to the points of the various questions I got from people where they were saying to me, like, you know, how do you know? Well, you kind of have to look at it and just kind of make judgment calls. That's kind of where the skill comes in, and the kind of the human element, because a lot of these aren't necessarily straightforward to answer, and you kind of have to take it. I've had this experience, and it's probably an anecdote I'll bring up in a couple of weeks' time, where, you know, we have two things. We're trying to answer a question, and we can approach it in two different ways. And kind of thinking about it, I can make arguments for approach A and approach B, and I'm not sure which one is the best one, because I don't have enough domain knowledge to properly answer that. So you kind of have to talk to the people who are involved to say, well, we can take this or we can take this, and what exactly are you trying to achieve here, or what exactly it was being collected, or what does this value mean? And that's kind of where you start. And the only way to do that and to kind of gain that kind of insight into the data is just to start visualizing it and exploring it. So just to give a very simple example of this, and well, I've got enough time to at least cover the basics. I'll just talk about claim rates. So very simple. Let's say we've got a book of business. This is publicly available data that I could use. So for those of you who aren't familiar with general insurance, and this is just car insurance data. So we have a whole list. We have a table of policies, and we have a table of claim amounts that are listed against those policies. I believe it covers a period of a year. It's a little bit unclear where the data is coming from originally, so that it's there, but I think it's over a year in France. And let's just like do a really simple thing of just plot the claim rates by region. So we see the data there has a bunch of different regions in France, and this is a very basic statistic that people would want to see in general insurance. You know, like on a per claim basis, how many claims are we getting per policy per region, right? And that, just to belabor the point a bit, so 0.075 means if we had 1,000 policies in Aquitaine, we would expect to see about 75 claims, right? That's kind of, or in the data, there are 75 claims per 1,000 policies, right? That's kind of, and the reason why that's a very important number is because it's a very important to determine. Typically, the way you price insurance is you have the frequency of the claims and then the severity of the claims, and you multiply them together, and that kind of gives you the cost of issuing a policy to someone. Not necessarily the market price, because that's dictated by market forces, but in terms of the liability that your company is assuming by writing this policy, that's kind of roughly, and of course it gets a lot more complicated than that. But the claim rate, or also known as the frequency rate, is a very important aspect of that. Now, one of the things to say though is that's a single number, right? And what we're not really capturing here is how reliable is that estimate of the underlying reality? Because at the end of the day, when we're dealing with these kind of things, we have what we observed, but we also know that what we like, it's kind of a very uncertain world. So we know that this is just an estimate of what the true underlying number is, assuming there is a true underlying number. But you know, those are kind of these are the kind of the questions we're trying to answer. Yeah, sorry, I've just seen that column. I'll get to that in a sec. So it's good to have, and another good example of it is if you have different policy counts in the different regions, you know, there's geographical population dispersions, or, you know, our marketing campaign may have focused on certain areas of France. So therefore we have a lot more policies in one area and much fewer in other areas. So, you know, how reliable are these estimates of, and quote, underlying truth? Well, there's a couple of different ways we can go about that, and there's all sorts of different ones. A really, really simple one for doing that is what's called the Bootstrap Method. Now, I won't get into too much details, but basically what you do is you get the data and you resample it kind of randomly, and then you recalculate those summary statistics on these random samples of the data, and then you calculate the assessment, and that essentially gives you a distribution of values. And that is kind of the outputs that we get here. We're looking at the bars here. If you can see the screen there, yeah, we have the red dot is kind of the average, and then we have an inner bar and an outer bar, and that's representing the 10 to 90% and the 25 to 75%. So like the quartiles and the 10% of the 90th percentile. And essentially what you can see is that like the region Centre is quite a good estimate, because there's not much variability in the sample. When we resample this data over and over again, we're actually coming out with a pretty solid estimate on that. So what that is telling us is that, you know, there's, again, our models can always be wrong and it's not great, but we would have a lot more confidence in this number than I would have in this number here for Limousin, because, you know, it's just a much wider band of numbers, which tells me that there's more variability. So it's possible that Limousin has just a smaller count. So typically what happens with these, because of the statistics, is when you have very large if you have a large sample size, then you won't get particularly wide estimates in the when you do a bootstrap on it. But if you have small sample sizes, you'll get much wider variability. And so this is and like I'm saying, this is a very simple way of approaching it. That's why the bootstrap is so popular, because it's a really, really simple way of doing it. It does come at a relatively high computational cost though, because you've got to do these calculations over and over again. And if the underlying calculation is expensive, then instead of, you're doing it, instead of doing a calculation once, I'm now doing it 200 times or 1,000 times or whatever it is. Generally, you don't need more than between 500 and 2,000 though. But still, if that's taken, if you're fitting a model and the model takes, even a few seconds to fit, now I've got to multiply that by 1,000 just to calculate these bootstrap estimates. So, this is what I'm saying. None of the, and all of this can be done very, very, like I'm doing all this in R. It's very, very easy to do this in Python or even in Tableau or Power BI. None of these are particularly complicated visualizations. None of them are particularly complicated approaches to this kind of stuff. But we kind of know what the feelings, and we know, look, we're not saying that Sondra has this absolute claim rate, but we do know that, there's not much variability within the data, even when we take samples of it. And that's a valuable information to know as part of the decision-making process. So, but we can also go a bit further because, like I said, because we now like originally in the original version of the data, when I first got this, it was just region numbers, but then later on they started adding these actual names, and you can get geospatial data because, people love maps. So we can start putting the things on a map. So we now have a map of France. These are the various regions. This is all provided, you can get all this stuff on the web. A lot of this stuff is published as part of the EU and stuff. So we have like geospatial files of each of the different regions. And now we're just creating a map of France where we can look at the claim rate by region. Now, this is one data set. Immediately, we can see something from this data, and that is that there's either a lot of data missing in this data set, or it was some kind of weird like policy company that focused on these regions. But even then, that's kind of odd because it's not kind of contiguous. So you like Ile-de-France and Picardy is missing, and so is this Pays de Loire. So that's a bit weird. And yet, so as a result, immediately, I never really noticed this because I'm not particularly familiar with France. So I knew there was provinces, but I didn't really know how many different regions there were. So, but as soon as I put it on a map, I immediately noticed, oh, actually, there's a load of regions missing in this data. And I went back and checked the data because it's always possible that you've made a mistake. In fact, typically when I'm doing this kind of stuff, when I see weird results, my default is to assume that I've made a mistake. I've somehow like had a bug in my code, or I've done something really stupid that has somehow eliminated half the regions. And it could be just, a simple oversight. But again, another great way of doing these things is you can do these simple checks very visually, very quickly, and it tends to, and quite often it comes back and it's not a mistake. But I always still assume that I have made one because that is the simplest explanation and is usually the case. You don't often find these massive insights from looking at a data just immediately. When you see something weird, it's probably because you've made a mistake and it's kind of how you're interpreting it. But there's another data set in there. So I loaded that up and did the same process. And you can see here, there's still a few regions missing. So that to me is always kind of curious as to, and also the patterns are different. So it's not like it's the same data set, which I kind of knew, but you can really see it there just from looking at it. You actually see a different geographic spread of claim rates. So that's a very good way of saying, oh, actually, we're not really dealing with similar data sets here. These two, even though they look the same when you look at the data, maybe they've been standardized or something, but the two data sets look quite similar. But you can kind of see very, very quickly from just taking these kind of very simple approaches that I've got these different regions and it all kind of works out. And, it's telling us that there's things we need to look at. So I've kind of flown through the end there. There's no real summary to give because I'm very conscious of the time as well. And I'm conscious you're giving up your hour of lunch. That does kind of give us a couple of minutes though, before people go. Does anyone have any questions? So Yes Minister has a great example of using data from a questionnaire where asking the same question, but with a different slant provides completely opposite results. Yeah, absolutely. And it's a known psychological problem. It was the whole Kahneman and Tversky stuff of how you frame a question can often give very different answers for basically the same question, but asked in a different way will tell people to so it's the whole loss aversion. So if you highlight a loss, people will take the choice that averts the loss. Whereas if you phrase something as a potential gain, they will generally make the decision that allows them to gain something, as long as they're avoiding a loss, that kind of stuff. So, but it happens in a less, I mean, that was a very cynical and kind of pernicious thing that, you know, Sir Humphrey has a tendency to do. But it's actually, even when you're not necessarily trying to, and we'll talk a bit more when we're talking about like the dangerous statistics, we can talk a little bit about how people can do that and things to look for. But even when you're coming at things with a certain level of intellectual integrity and honesty, let's say, where you're not really trying to provide a slant, you're just trying to provide an answer and give as fair a representation of the data as possible. How you interpret the data or how you approach things can often lead to very significant differences in terms of consequences and like the right thing to do, because, you know, and again, I won't go into it at length now because we don't really have the time, but that does tend to be, that can be a really important thing. So kind of what I'm saying is, in terms of when you're trying to make these judgment calls, the first thing I would always tell people is try to get as simple a statement as possible about what you're trying to do, and try to be as explicit as you possibly can, because when you let things be a bit fuzzy in your head, and to the point where sometimes it's worth writing things down and actually literally put it into English or whatever your native language is, and be explicit as possible about what you are trying to do, because that will often shake out an awful lot of these ambiguities in a very effective way. And I often do that myself. I'll just kind of you know, I'll plow into something thinking I know what I'm doing. I'll stand on a couple of rakes and then realize, oh, I actually need to take a step back here and think, you know, it's thrown up some subtlety that I hadn't really thought about, because the brain is really, really, really good at kind of blurring through subtleties and these kind of weird side effects, which is why it's very, very hard to estimate how long a project is going to take. And just take a step back and have a think about it. And hopefully in the next couple of weeks, we'll try and tease that kind of aspect of things out a bit more. But I'm very conscious of the time. It's about 3 minutes to now. So I'll kind of leave it there. And yeah, Damien, if there was, I may have missed some questions. So please, if there's anything I've missed, just let me know.
Thanks very much, Mick. If anyone has any questions for Mick, we've another couple of minutes. Feel free to volunteer the questions. So some really good stuff in there, Mick. Particularly interesting, the undocumented change requests.
Yeah,
stood on a few of those rakes myself.
Happens all the time.
Fields have had different meanings down through the years. Different data essentially within it. Should have been renamed. Should have been documented.
Yeah,
I suppose.
I mean, the easiest example of that, which is the easiest to deal with, is where you basically have a date, for example, as a text field, and the formats change over time. That used to be a really hassle. Those problems are easier to solve now, believe it or not, because there's a couple of libraries that have dealt with that thorny issue and just kind of solve it. So you can say, try this format first, then this one, then this one, then this one, and that kind of solves that problem. So that's not as bad as it sounds. The problem is, like you said, is that, you know, when the actual meaning of the date changes halfway through, and, you know, it would be nice if the format also changed in that case, but usually it doesn't, because, you know, they often will have, you know, that example I said was kind of older systems. Nowadays, there's usually better kind of formatting input, so it'll reject a badly formed date or whatever. But yeah, if there's no control over, and what will often happen as well, certainly in insurance, I've heard, is that the system gets designed and then a new line of business comes up, or a new country, especially in Europe, like a new country is entered, and the needs of that market don't quite fit the existing system. So they kind of have to shoehorn the details of the business or whatever into the existing system. And that creates these different subtleties where this field means this thing for these 7 countries, and then it means this other thing for these other 3, and then for all the rest, it means this 3rd thing. And, you know, how do you unpick that knot, especially if you're trying to get, you know, a European-wide view, which is quite often the case. We want to see what our EU exposure is. Having to answer those questions can be, you know, quite challenging. But like I said, the best way to tackle it is just to start simple, you know, one bite at a time. Just fix one. In that case, how do you deal with that problem? You start with one country or one set of countries, and you solve that problem first. And that the benefit of doing that, like I said, by taking that approach is it will lead you to insights to tackle the later issues later, because you've now learned something. And how can I apply what I've learned to this new area of it?
That's brilliant, Mick. Thanks very much for that. Yeah, that's probably something that'll be a recurring theme. Nuance in the data can kill you. But if no one else has any further questions, we might end it there. And I thank everyone for their hour on their lunch break. It's great to have such.
And just to say, I mean, some people did mail me during the week. I got a couple of emails that was gratefully received. Thank you very much. If any of you have any questions about stuff I've said, like I said, if the stuff that people would like me to go into, if I've made, I tend to make a lot of throwaway comments. If the stuff that you think would deserve a lot more focus, please let me know. Or even if you have just specific questions, just drop me an email. Like, I'll put my email there at the end. Hold on one sec. Just for people who, just mcooney@describedata.com. And all my stuff is up on the workshop. I'll share the URL as well, Damien, after this. Brilliant. For these particular slides. Not that, I don't know how useful they are after the fact, but there you go. And yeah, thanks for everyone who showed up.
Thanks very much, everyone. Thanks very much, Mick. We'll see everyone again next week at 12:30, and I'll send out the link to remind everyone again as well. Thanks very much, everyone.
Thank you.